Morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 11th of May 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, perspective, optical illusion, the markets, it's all a bit tricky trying to read some of these things sometimes. I'm going to talk a little bit about that today and some of the solutions. Now, it's a bit of a bumper issue today because I am taking that 2 weeks off, so there'll be no YouTube videos in the next 2 weeks. But this week, in the next few weeks, I want to talk about perspective and biases. And as from last week's newsletter, this will be the topic of conversation throughout the newsletter and YouTube videos over the next few weeks. The potential solution to this problem was addressed in Radar's rant in the last newsletter, but understanding it is important to help us implement solutions to this problem, and it's a big problem. Okay, currently the ASX 200 is hovering below the market highs, and it's tough as the heavyweights are weighing on our sector. It's basically a heavyweight index, the ASX 200, masking all those smaller stocks below there. So the key, I think at the moment, is to safety in these situations is follow and focus on the trends, and tourism and healthcare are probably some of the sectors we're looking at the moment that are doing reasonably well. Also in trading tactics this week, I'm going to be talking about perspective, getting that long view of stock, where we are, what are we doing, and that's all part of these biases things, trying to get our headspace in the right frame of mind. So we'll talk about that later on. So firstly, what I want to get straight into is the top 10. And we see CSR at the top there, which had a bit of a blip yesterday, but this always happens with weekly charts. We get a little bit of a cut back, but the trend is pretty good there for the moment. We've got a couple of gold stocks in there. There's a couple of ETFs. Fisher Paykel is still in there and is doing very well. It's climbed off the lows there. It's been very, very steady, taking out resistance, stepping higher, and looking very good indeed. Okay, so that's the top 10 trend intensity ratings. Now we want to go straight into the markets. Okay, so the Dow Jones, as we can see here, it has struggled. Excuse me, we had a couple of good rallies there, but we can see at the moment this downtrend here and this lower high here really is giving it a bit of a problem at the moment. We've got a higher low here, we've got a lower high here. We're really getting smashed into a corner here as to what is actually going to happen. So again, we let these things play out, but the Dow is certainly struggling. It's at resistance at the moment. It may break through. The highs aren't far away, so let's just keep our fingers crossed and we might see some more moves up there. Okay, let's go to the S&P 500 again. Not resolving from the challenge, but not breaking through yet. So you can see we've got this big resistance level there. It needs to break above there at R1. There's 1, 2, 3, 4, 5 stops there that's holding it. We've got 2 good high lows here. So it really is a battle we're in at the moment. We've got the downtrend that's been running down here. We've got an accumulation pattern happening here. And we know that usually an uptrend is what follows. So we've got heightened volume here, plenty of debate, plenty of interest in here. So we'll just have to wait until we get some sort of message here. If it breaks here, we'd like you to see this one here. If it breaks down below here, we're going to see this one down here. So that's a bit about how it works and how I look at things. Okay, the Nasdaq again also similarly strong. Holding up reasonably well. Again, we can see clearly this resistance level down here. We bottomed out around just above 10,000 and we've got a nice little trend starting to appear here, but we need to get through this resistance as we have seen week after week. It's still there hovering, and again, the longer it takes to break these things, the better it is, I think, for the breakers. It means there's going to be a bigger adjustment in the buyer-seller standings there. So we just watch those for the moment. Gold is still doing pretty well, still making new highs for the moment. There's certainly some long candles up here, some forays high, been knocked back again, but generally this trend is still up, and the volume formations are looking a lot better than they have been for a while up here. So gold is still probably looking fairly good at the moment, and we do certainly hold some gold stocks at last for this one. Okay, Dr. Copper is again struggling here at this lows here as we've seen. It's got this lower high here. We had a little bit of an uptrend here which seems to be crumbling, a bit of a lower high short term here. Not a lot of volume here. This is starting to fall flat. So there's really not a lot of impetus in this market going up at the moment. So copper might be a little more of a sideways situation for the moment. And Brent crude, also the pressure's down. It almost fell down below here, but it clawed its way back up there and it's just holding above there for the moment. But the pressure is still down. This is a dominant force down at the moment, always more dominant than support. So support is holding for the moment, but this is where my priorities lie. The downtrend of lower lows, lower highs and lower lows there. Okay, so that is the overseas markets. We go to the ASX 200 now. How exciting is this? Okay, we're at the highs. We really are at the highs. As I said before, we're hovering just below these big highs here. We haven't really come back again down here yet. We've held at S1, which is good. We're getting a lower high here again. So we're getting all these sort of conflicting signals. We're going to try. We can't quite make it. We get resistance. We get a higher low. It's all pretty difficult. And the momentum index down here, it's positive but flat. So, we just have to really, this is the weight of the big stocks really is hampering the rise in this. So we just focus on the stocks that we want to focus on. And they're obviously the smaller ones at the moment that are doing quite well. And we'll look at a lot of those today. Okay, so that's the stock picks. I just will show you now. Stock picks, we had one new one last week. So the stock pick count is 54 of 183 altogether. 47 stock picks of 160 stocks, 7 ETFs of 23 ETFs there. So that's not too bad. We've got some slight accumulation of stocks there. And if we look at the portfolio update here, the conservative portfolio has been pretty steady here at 5 out of 20. So that's 25% equities. Again, that probably reflects the leader base because it is a cross-section of leading stocks there, so that probably reflects that pretty well. 8% CAGR at the moment. Big 5-stock Energizer from 2003 is still doing well, 100% equities there, 5 out of 5. The Energizer 10 is 10 out of 10, so they're full of stocks at the moment. And there's some good stocks in there. The Energizer 5, the shorter term one we started August 20, is still doing pretty well, 5 out of 5. And also the one we started in March 21 is also doing pretty well at 5 out of 5. I mean, the gains haven't been huge, but we're holding fast at the moment and doing okay. So that's really the portfolio update for the moment. The markets are okay. There's some good stocks out there, which we're going to have a look at in a minute. Okay, so that's that part of it there. So last week, we went through a few stocks there, QBE, Transurban, which we're going to have a look at there, and a mixture of stocks there, Medibank Private, some of the gold stocks there. So we're going to look this week, as I said before in the opening, focus on a few tourism and health stocks there. They're sort of starting to do pretty well and certainly worth watching. So let's go straight in and have a look at, well, there is one heavyweight that is impressing me, and it certainly does its own thing, and that's Telstra. And it's making new highs for the run at the moment. It had a good consolidation phase, so here it's broken up through here. And in all the scheme of things with this market but struggling, Telstra is doing very well. We can see some very good volume pushing this high here. We've got some good momentum. And if we just go back a little bit here, we can just see here, we've had a big downtrend here. Then we had a big base down here around 260, it rallied, and it's now sort of starting, this trend here, it's sideways moving, it's started to clear through this high and all these highs here, which is a pretty good position. So it's breaking high in what I call a Dow market, which is probably a good sign, I think, for Telstra. And we've got good volume and very positive momentum there. So I think Telstra, for me, trend intensity rating +8, you hold fast with your stop on that one. That's quite a simple equation. Okay, we looked at Transurban last week, and this is really just reinforcing that there is a big resistance level there, which we're going to watch for a while, because we know the chances are when it breaks through, it's going to unleash a pretty good rally, because it has really been stuck for quite a few years in this trading range, and mostly between about 12 and about $15. So trend intensity rating is 0 for Transurban, so keep an eye on it. We've seen a bit of volume pass through here recently. We've seen a bit of momentum. So that all looks good, but we really need this break of R1 to signal that this is going to continue on high. So that's Transurban, just confirming its status as being below resistance, and we're just waiting for a little trigger to go off there. Cochlear is the same. Again, a great stock, a great business, but again, we've got to this level again. 3 times we've hit this all-time high and have failed. We haven't failed, but we haven't got through it yet. So this is it. This is the big one. Okay, trend intensity rating is 0. We've got some reasonable volume that's come through here. I can just squeeze it up a little bit. It's a battle to a certain extent. We can see the selling here has come the last few weeks, but hasn't really pushed the price back a lot. Momentum is still strong, so this may well, with a bit of a pullback, push straight through here fairly shortly. And I know CSL, another stock there, is also looking very interesting, and you can have a look at that one on the Trading Centre on Stockradar if you want. But these stocks here, look, they just got the big consolidations below them, really looking quite nice and ready. If it's this time, it may be next time, I don't know, but we just wait. We play the game the way we have our strategy. If we get a 1% violation of a break there, we take it and we set a stop and off we go. So keep an eye on Cochlear. It's looking like a good stock there for the moment. Okay, so now I'm going to go to the other one is Medibank, which I did show you last week, and I find it fascinating this stock again. It's another health stock which is poised and ready to take off, because this really has been a pretty remarkable performance in the light of that big hacking problem it had. It recovered very quickly on some very good volume, some very good momentum, and it's back at those highs. And we've got 1, 2, 3, 4 points here. Trend intensity is 0, waiting to confirm a break above R1. So it's a really good looking picture, Medibank Private, and I'm not too sure why necessarily it would break through here, but that's not for me to reason why. But I see the price action, what it's doing, and we see some good volumes down here, good momentum, ready to really tackle this R1 level strongly. So keep an eye on Medibank Private. Okay, and the other one we looked at last week, I'm just going through a few reviews for you for this week. Evolution, which we saw last week, and it's recovered pretty well. It's had a pretty good week last week. It broke above that area there, that switch zone where we had the horizontal resistance here, we have downtrend resistance, and we also have the moving average. All those three things now have been taken out, confirming a reversal in trend. We've got momentum turning positive. We've got some reasonable volume there. It's still a little bit tricky there. Let me just get that back down. It's a little bit. There is certainly some reasonably solid volume coming through here on the buy side. So I think, all in all, it's pretty positive. For some reason, I don't have the trend intensity rating on there, but it would be around about, probably around about 9, I would think, for Evolution at the moment. So they're the three stocks I looked at last week, and you can see how they're developing as we go, and Evolution looks pretty good there as well. Okay, now, I mentioned to you before tourism stocks, and we're getting a little bit of excitement starting to happen. I know we've got Auckland International Airport and Qantas, which have also already run on a bit, and we'll have a look at those in a second. Qantas being an interesting stock, considering what we've seen recently, and I'll talk a bit about that in a minute. But Flight Centre is climbing its way quite quickly towards this R1 level, which is really our break point for us. We've got some good support down here at around about $13.50. Up around here, we've got the resistance up around $23. Okay, now this rally here has been solid. It's now above the average. You can see here we're getting some reasonable volume down here. And we've also got the momentum starting to tick up and get a bit of acceleration in price. So it's got some move towards, it's got some strength to tackle this area up around $23. The trend intensity rating is 2, so things are turning. We've had a downtrend, we've had accumulation, we've had struggles, but we're now looking like we might potentially break out of this range and start trending higher, which would be nice for Flight Centre people. Okay, now we'll just go down to our other one, Auckland International Airport, which we've seen for a while, and it's creeping its way higher without being accelerating enormously. I'm just going to squeeze this one up again because they got that big volume there. We can see here the volume hasn't been fantastic. It's been middling, I should say. There's a good bit of volume here. Momentum is good. It's above the average. So the weight of evidence picture is strong at trend intensity rating of 9. We've broken this resistance. In all likelihood, this is probably the next stop, but we work with our stock to protect ourselves. So this is our little uptrend here. It's looking pretty good. It's rallying, and we do have that groundswell within that tourist area. That is starting to push some of these stocks. You can see there's a bit of demand happening. Okay, now Qantas Airways. Qantas Airways is an interesting stock. Okay, we love to hate it, hate to love it. It's a monopoly stock. Let me just go through a couple of things here. In current affair the other night, we saw a guy called Gavin Silbert, who's a King's Counsel, taking on Qantas after claiming the airline completely ignored its attempts to cash in credits for flights cancelled during the pandemic, and I'm sure he is not the only one, and it seems very much the wrong thing to do. In fact, really, if a flight is cancelled, you should expect to get your money back anyway, but Qantas haven't done that. How does Qantas get away with that? It's too big, too powerful, and a monopoly effectively full of conditions and blocking procedures. I don't know if you've had a conversation with Qantas about trying to get some of these things back, but it's a long conversation and it doesn't get you anywhere for whatever. It does what it likes, Qantas, and in the end, for shareholders, that's probably not a bad thing because they've got all this money of ours and they're making money. So it's a bit of a double-edged sword here. It's a bit like some of the other stocks, that you hold Qantas because the price is going up, but you hate it because it takes all your money and doesn't give it back and stuff like that. So it's a difficult question, but it's going up and still holding, and really considering what we've seen happening in the last few weeks, it's holding up pretty well. Trend intensity rating is +7. So what money makes the world go round, and it's making plenty, and the shares are rising again. I know it's a dilemma, but that's it. So it may hold, but we can see down here there's certainly plenty of debate here. And when I see this here, I say, well, that's a really good thing, because this is still holding up and still rising, despite there's obviously quite a few selling bars, red bars here, testing this trend. But there's obviously a lot of buyers holding this stock and not going to give it away because it's making money. Okay. Momentum has slowed a little bit, so we're wary of it, of course, but R1's probably our objective at the moment. But if it does go below our stop, which you can see in the trading centre, then we certainly will be out and just lock in our profit for the moment. So quite a tricky one, I should say. Okay, in that area as well, we're going to go look at Webjet, which we've looked at for a while. It's sort of been a pretty good performer. We can see the breakout here above S1. It's had a little resistance level. It's kicked higher again. Trend intensity rating is +8. We've got a nice little uptrend developing here of high highs and high lows. We had a good volume on the breakout. The volume's still been supportive through here. We've got some very big volume down here at the pandemic lows, which is a little bit misleading. But back here, we can see a lot of green bars. Momentum is positive just. So that's a good thing. It's a bit flat, which means it's a steady uptrend, which is what you can see here. It's just a steady uptrend. It's not accelerating. It's not coming down. It's just going higher high, higher low, higher high, higher low, higher high, and hopefully we get another higher low here again. Trend intensity rating of 8. So that's the corner of the market that I'm sort of looking at the moment. That's doing okay. It's in an uptrend, so why doubt it? And I know when we worry about these stocks, it probably means there's plenty left in it and plenty of buying left to go yet. So keep an eye on those stocks because they're pretty good. Okay, the other one we looked at in the highs, for new highs last week was Stockland, which is again a property stock, which is, it's been interesting to see what's been happening with some of these stocks, but here it goes. It's still going up and up and up, Stockland, and there's been some very, very good volume supporting this stock here, and momentum is very strong. So you don't give away these stocks unless you're told to by the stop, and the stop is nowhere near the current price at the moment. So we hold this stock, trend intensity rating 9, R1, well, it's a potential target that's up around $5. So we'd love to see that price in front of the Stockland, that number in front of the Stockland share price, which would be excellent. Okay, so that's a good one, looking pretty good there. Okay, now just a couple of other little stocks here. They were money new highs I was talking about there. Now we're talking about trend reversals. We've got an interesting stock here called Net Wealth, which we now cover. Now it's come down here. It's found some very good support here at a big resistance level here. It was resistance and is now providing support. It becomes what I call a control line, okay, which sort of controls the price below it, above it. So it's above it at the moment, forming a trend reversal pattern. Higher lows there, bumping into this resistance at $13.90, $14 the whole time, okay? So that looks pretty interesting. We've got some good sort of sporadic volumes here, but generally what we're looking at is the overall picture. So if we look at this, the moving average is flattish, momentum is neutral. There's not a lot here in the volume side, so it really is a wait. But I think if you get a break above here, and we've had a good week so far this week, if we get a break above here, may well see a few buyers get on board, a bit of momentum gather, and of course it will be above the average. So it's had a 40% correction, so that's a pretty good correction for now. And if it can break through here, then we may well be looking at an R2 level, which is up around $18 for Net Wealth, and it can move when it wants to move. Okay, so smaller stock, be careful, but there's Net Wealth for you. Have a good look at that one and follow that one. The next one is James Hardie, which is a big downtrodden stock, came down 50% from its highs, really got knocked about quite a bit. But now we're really starting to see the buyers come back into this stock down here. Momentum's just about to hit the positive zone. It starting to trade above the average. A little uptrend here, a higher low here. We just need to wait for this R1 level to give way, and then I think we're going to see a pretty good rally there. Trend intensity rating is still -3, and it's clawing its way up, so it is neutral at the moment. But R1 is the level that we're looking at, and you can see here fairly clearly this level. It's 1, 2, 3 times it stopped in there, and it's now back up there again, having another shot. So we quite like James Hardie, and it's looking pretty good at the moment. It sort of looks set. It sort of looks ready, set to go. So the buyer-seller balance is turning there, and that's what we always like to see. Okay, the other one I want to look at new highs is NHF or NIB Holdings. Again, this has been a big long-term high, this one here, going back to 2019. Again, now we've got this pattern here, which we can see, which is now saying, okay, we've got high lows, high lows, high lows. These guys are fairly fairly stubborn up here, selling and selling and selling, and they've given a few whacks down here and knocked these buyers back, but certainly the buyers have been resilient, and we're now seeing these higher lows pushing at this level. And I think with this sort of thing, these sellers, sooner or later, are going to give up and go away, and they're going to have to reverse their positions from short and cover those positions by buying back, and that will add to the already strong buying we're starting to see here already, which is fantastic. Momentum is starting to gather, the buyers are back, and it's looking very interesting. Health, well, we're looking at, insurance. Remember, QBE is looking pretty good at the moment. Even IAG starting to levitate again, so hasn't taken off yet, but they're all looking like they've got some good support in there. So this is quite like the look at some of these stocks here for the moment. So a break here resumes a long-term uptrend for NIB holdings. Always interesting to look at these big pictures, and you can see that always these big corrections are always fantastic opportunities. That would have been a good 40-50% correction from $8 to $4. So again, it's in that buy zone. Then we look at what we see down here, reversal pattern, which gives us our in there. So we trade these longer term trends. We trade the spikes, momentum moves. We don't want to be in it all the time. But this is a very interesting stock because I think we're going to start seeing a resumption of this long-term uptrend, and a good opportunity, gets good leverage from a break above this point here. Okay, NHF is a very good stock. Hello World. Okay, we looked at this one. When did we look at this one? A while ago. I can't actually remember when it was. It wasn't too long ago. It's a small cap, but again, it's also had this situation where we can see, if I just blow this up, we can see the downtrend clearly there. We can now see what's going on. And we've got this big accumulation pattern, if you like, across here. We've got the downtrend accumulation, and what follows that is usually an uptrend, okay? And we're getting all the things we want to see, okay? Again, in this situation, there's never guarantees, but we put the odds in our favour and we keep playing those odds. Remember, we're going to win one, we're going to lose one when we trade. The one we lose, we cut. The one we win, we run. And that's how it works. So here we go again. We're getting opportunity for Hello World. It's got 1, 2, 3, 4, 5 points on this resistance level here. It's had a fairly sharp rally back here, like Flight Centre, like Webjet. All of a sudden the buyers have come back into these stocks, and we can see it clearly down here. It's here for you to see. You don't need fundamental knowledge. You don't need any expert telling you what to do. You can just see buyers are buying this stock, and that's a simple answer that you need. And when buyers are buying a stock, you want to get on board when you get your signal. And that depends on the strategy you use and where your signals are. And my signals are here above $3 will be a buy for Hello World, and with a stop. And that's simply it. So above the average, good volume, momentum ready, trend intensity rating would be probably +3 at the moment, ready to trigger a move for Hello World. So that's an exciting stock, I think, on Hello World. Let's see what else I've got there. So that's all the stocks I've got for you today. Any other stocks you want to have a look at? Of our 160 stocks, excuse me. Still got one of those niggling coughs that have been hanging around in Melbourne for a while, so excuse me for that. So that's really all I've got for the stocks at the moment. Now I want to have a look at trading tactics and have a look at that. So trading tactics, we're going to talk a little bit about biases again. More about perspective more than anything today. The whole issue of bias and perspective is a really interesting area, and I'm going to talk a little bit about that psychology of it, why we are hardwired to certain things in this market, and why we feel certain ways, and the actual market is actually the wrong way to think. And it's got to do with how we like to have rewards when we trade. We like to feel like we're winners, and sometimes when we do that, the market's actually telling us the other thing, but we don't want to hear that, so we don't listen. Anyway, that's part of the issue. I'm also talking about illusions. So sometimes we can create our own illusions. So I'm going to talk a little bit about this now in my trading tactic. It's a simple trick of the eye sometimes. So you can see, do you see the word here? Okay. If you just tilt your head to the right a bit, you'll see it pretty clearly. We all see things differently. Okay. It's a matter of being able to see what you should see. Often our minds trick us. We need to trick our mind. We need to trick back. Okay, we need to trick our mind back sometimes and say, no, it's actually this. Our minds create their own illusions. Our mind is a very powerful muscle that drives us in a lot of ways. And don't you know how it makes you make these wrong decisions when you should make these decisions, and when you can see the decisions when your money's not on the line. Okay, it's much easier to see when money's not on the line, because money's sort of driving force sometimes. So we've got to be very careful about our mind, how we use it, and how we trade. What I want to do today is really just go back and one of the ways I do this is getting perspective on what a stock's doing, and getting a long-term view and an idea of some of these stocks is also a very good way to look at things. And I've been talking about downtrodden stocks for a while because we have a lot of stocks that have come off 40-50%, and they're great opportunities for you, not just for trading opportunities, but also for long-term superannuations and portfolios, things like that. So I'm going to go through some of these stocks today, mainly on the internet stocks, which you'll find very interesting. So how we can see things and get reliable perspective. Okay, so there's 6 charts I'm going to go through which will give you the benefit of perspective as to what it is. So firstly, rare group here, you can see when we focus on this last couple of years here, and we get very embroiled in what's happening here, and we are long this stock. It is running higher, but when we look back since 2012, this stock has gone up in an enormous way. It's in a long-term uptrend. Okay, we saw a blip from COVID here, and that was an opportunity. We've now seen another big move back down. It's found support here, and we can weigh up these opportunities as we like, because when we do see the downtrodden stocks, we like to make sure we get that evidence of support, and it's likely to rally, because that's where we come in. We look for the momentum move and the trend move that's about to swing. So with Rare Group, we're looking for that because the stock has come back to its long-term trend. It's found support, and it's now starting to rally with all the good things here, volume building, momentum building above the average. So this looks to me, trend intensity rating of 8, or I hope, that we're going to resume this long-term uptrend. So it's just an interesting situation to come right back and look at some of these stocks. Car sales is a very similar position, trend intensity rating of 8, a long-term uptrend since 2012, a couple of blips come back here, and here we've got a big blip that's come back. It's found support back here at the old COVID high, and we're now starting to run high. It's been a very choppy rally high, and sometimes these stocks aren't easy, I can tell you, because they don't yield a lot, which they don't have that cushion, which is sort of a bit unfortunate. But the longer-term potential of these stocks is clear to see. From 2012, where it was about $4, to be now at $20, which is actually about $23. It's a pretty good rally. It's a big increase in equity. So it's fairly good. So Seek's another one, sort of a little bit different shape. They're all different shapes and sizes, but this is how they look at. Seek's gone from about $5, and it's currently about $25. It's been up to $35. The moves are big, and that makes it hard sometimes. That's why we like to trade them. And if we see a good move, we jump on it, and we get stopped out. We just wait for it to come back. And this one here was a fairly significant plummet from 35 back to 20, a big move down. It's come back to the long-term trend here, come back to support here, and is now starting to lift off here. We're starting to get a bit of volume building, and we're starting to get a bit of momentum. So the picture is here. There's probably a short-term opportunity as well as a long-term opportunity. So this perspective we're getting by looking back and looking at 10 years worth of data is actually quite a useful way of just putting things in perspective. ResMed, another stock. This is a health stock, this one, which we know, and it's had a very tough time of late, and we've had to be very, very patient because we've held this stock for a while as it held above this support. But you can see again, it's had a long-term trend from 2012 up to now. The correction hasn't been nearly as big, but it's now starting to rise from support. This old support area is the same situation. Trend intensity rating is +9. We're seeing a little bit of volume building. I know this is squeezing this down a bit, and I can't change that here on this chart because it's not live, but it is starting to build, and momentum is starting to turn positive. So the wheel is turning, and you can see here the price is starting to jump, which is what we want to see. So R1 is certainly a target on there for ResMed. Okay, the next one I want to have a look at. These are probably more. They're probably the longer term ones, and these are probably more newer ones. And I know NXT or NXDC has gone to market for a capital raising, I think, today, looking to build more data centers, which is what we want to hear about because I think they're very good, and that's its business. Trend intensity rating is 0. We haven't gotten into this one yet. It did come back to support. We never got a signal on this one here, so we're waiting for this to either create a trend reversal, which would mean to come back to a higher low, and then we can perhaps buy it above here, or else we wait for a break of $14 up here at R1 for NXDC. We're not in a hurry. We don't have to be. We know they will do this sort of thing. We know that the long-term uptrend is up. This is building. This is building. We're getting all these things in a row, so we don't have to actually trade it yet until we're ready for it. Okay, till we get the signal that we have as per our strategy. Okay, so that's NXDC. And excuse me, that's the one we want to look at for there, NXDC. Yes, I think that's about it. Okay, there's only one more stock I want to look at here. So next DC is quite an interesting one there. And if we go to this one here, this is Promedicus. Okay, another interesting stock. Now, it's more of a recent comer to this thing. It started rallying from about 2019, or started before that, but the real significant moves have been when it ran through about sort of $5 or $6 here, up through $10, up through $40, up through nearly got to $70. So this is a pretty big move here, but it's really opening up a huge opportunity, saying this is a lot of demand for this sort of stock, and when we get a good correction, this back here, from 70 back to 40 is a huge move. It's a buying opportunity, a support there, okay? So we've had a couple of moves through here, which is fine, because we're trading our short-term trends, and we're actually still long the stock at the moment, I must say. It's hit the highs and hasn't broken through. We had a signal here down here a bit lower, but it hasn't broken through yet, so obviously our stop is in place. It may not go through this time, it may fail and come right back, we don't know, or it may go through the highs and continue on. That's what we're really looking for, is that R1 level to break and to tell that it's going to go through. So the trend intensity rating is still +6 on Promedicus, and is still looking okay. Okay, so there are just 6 charts there for you to have a look at. You know, there's plenty of great stocks out there that we can get into, whether it's for the short term or the long term, whatever. But the benefit of perspective really does put things in perspective for you if you get very involved in the day-to-day stuff, which I try not to do. I very rarely look at the market much during the week because it really doesn't do much for me. The ups and downs seem crazy and nonsensical, and I try to focus on the major trends which we see here. Okay, so that's trading tactics. These charts, you know, whatever happens in the markets, it can just as easily be an optical illusion almost, in the way our minds see what's there sometimes. It's easy to see what we want to see. It's easy to use confirmation bias to confirm the things we like to hear, and we don't want to. We close our minds to things we don't want to hear, and that's a really bad thing. So it's very hard to try and make your perspective focused and clear and see what is actually there. So in the markets, so it can just as easily be an optical illusion. It's easy to see what we want to see. In the market, stops are a very powerful non-judgmental tool, and that's why people use them so much, because they take away those emotions, they take away those biases and say, right, this is what's happened, this is what you do. Okay, here's another little chart here. This is from an old book. I don't know if for those of you who remember Cole's picture book arcade books, which were fantastic books, which my parents used to read to me a long time ago. Very politically incorrect, but also fantastic books. But there's also an area in one of these books that had all these little pictures, and I remember poring over these as a kid, trying to work out which is right. So here you can see the goat plainly, but can you see the milkmaid? Now, you may not, or you may be able to see, but you can have a little look at that. But that's a little bit about what your eyes see and what they don't see, and what your mind wants to see and doesn't see. Okay, so that's a bit about that. For those of you who can't see the milkmaid yet, you can ponder that for a second while I just go through my finale. Again, as I said, I am going away for 2 weeks to West Australia, going to be driving up the coast for a couple of weeks, enjoying a bit of warmth and getting out of the Melbourne cold, wet and drizzle, although it is sunny today, which is nice, but still pretty freezing outside. Anyway, bias is the topic today, and there is something we'll discuss in detail in the next newsletter at the end of May, but part of that discussion we had today about fooling ourselves into seeing what we want to see and are prepared to accept what is in front of us. Unfortunately, we are hardwired to rising markets and the rewards that go with it. But we must be prepared as good traders to identify and accept the not so nice alternative when things change, and often we don't. We continue to behave the same way even though the market's telling us something else, because we want that reward, we want that rising price, we want to feel good, but it's not happening, and that gives you real frustration. So in that situation, often we don't recognise these change. So what happens is we avoid it, we do nothing, and losses grow. This is where stops are especially useful in this situation, okay? As long as you use them. Okay, so today was just an introduction to my discussion in the May issue of the Radar newsletter about the big bias, as I call it, which includes all sorts of biases, confirmation, anchor biases, all sorts of different ones, and we need to learn how to see to succeed. But today was more about learning to see what really in front of us from an unbiased point of view. That's our constant challenge, to know when you do it and when your biases are taking over. Okay, So it's important to understand what you can see, and you're not letting those biases, which subconsciously can work on your mind pretty hard. You start to ignore certain pointers, but there's a very easy way to deal with this, and this I'll discuss in the next newsletter in May. So that's a little bit about it today. I hope it wasn't too much all for you, but it's a very important issue when we're trading to try and get these things right, see what we see. Otherwise, we're going to struggle to make money. So that's very important in my business. I'm trying to educate people, use examples of my trading system. It's not the be-all and end-all, but it's a trading system that encompasses risk, encompasses system, encompasses processes, encompasses controls, all the things we need in any trading pattern. Okay, but the big thing is, in a lot of these trading patterns, we need to be unbiased in our views, and it's very hard to get rid of old biases, old habits that we have built into our brains. Okay, so on that note, I'm going to say stay safe, watch your trends, heed your stops, give me a call if you need any help, but not over the next 2 weeks because I'm going away on Monday, and I'll see you again in a couple of weeks for some more insights, and who knows where we'll be, but I think it'll be a lot of fun. So thanks very much, and I'll speak to you in a couple of weeks. Bye now.